Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 6th of January, 2021. Thanks for joining me on episode number 1911. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What are we doing today? The overnight session brings in 400,000 contracts traded. Let's take a look at the convergenttrading.com pre-market summary sheet. We have a pretty neutral day, leaning slightly to the risk-off side as we sit below yesterday's close. But overall, the Nasdaq is very weak, as you can see, and but the others are holding steady. The S&P is pretty much unchanged, and allocation is really mixed this morning. Gold's a little bit off, silver's a little off. Crude's trading in the $50 handle. Big milestone for crude here. The notes are off. The bonds are quite a bit off. A handle 23. And of course, the currencies are mixed as well. The key driver here today is the Georgia election, which looks like it has been taken by a very slight margin by both Democratic senators. The Associated Press has confirmed or called one of the races, but not the other. Very, very close and tight races, causing some movement overnight. So that's what that is. If both Democratic senators take those seats out of Georgia, this means that the executive and legislative branches of government are now in Democratic hands. And this means that Senate Majority Leader Mitch McConnell is out of power. So this represents quite a big shift in U.S. politics and governance over the next 2 years before the next election run occurs. Some of these, I believe, both of these seats in Georgia are up again in 2022, if I'm not mistaken. Maybe I am. I haven't been following as closely as I normally do. In any case, I was here watching the trade last night, and it was definitely choppy. 401,000 contracts traded in the overnight session so far, with inventory mostly below, almost 80% short. On 49 and a quarter points of range on a balanced profile. That's what we're starting with. The thing to take away from this is that the session is likely to have a fair amount of movement as the market comes in, as the day session comes in, expecting a continuation of the higher volume and volatility. So this portends for us that we're likely to see decent action. The issue with the S&P right now is that it's sitting right on top of 3,700 again. I'll go over the structure yesterday. We had some really good structure yesterday, some really decent setups. And we'll go over that here in a second. As far as what's ahead, factory orders at 10, crude oil inventories at 10:30 Eastern, and FOMC minutes at 2 p.m. Eastern U.S. time. Here's what we looked for yesterday in the review segment. The primary scenario was for a choppy sideways open that finally breaks to the downside. Was looking for a retest of the impulse session low down here. That did not take place at all. The market stayed in balance. We ended up with an inside day yesterday. The secondary is a dip down towards the 3673 area for a push up into 14 and a half. right up here. And then what ended up taking place is actually an open drive from the open, pushing us out of the range of 73 and a push down and a target of 30.75, which was basically yesterday's high. So this is what we got yesterday, looking for a push down and then a squeeze out of the prior range, a battle in the 14.5 area, and then a squeeze into 30.75. The level above there is 36. This is how things shaped up in fact. Open drive, so we have the opening print and the low print basically in the same spot. By the way, the low print and the opening print were right on top of the microcomposite point of control in this area, balance point, and right against the prior day's point of control. We ran away from that price right away. This is a very early and quick caution to shorts. We ended up squeezing into the 14. Remember, 14.5 is expected to be a stumbling block. It is a big area, which includes last week's low. The market then pulls back all the way through the range, a deeper pullback than I had expected, all the way back down to the prior close at 91, consolidates, and then finally squeezes through and pushes to 30. Remember, like I wrote yesterday, 30.75 was the key target above, and we pushed right into 30. Really decent structure. We had our stock zone levels were really on point. This area here, the 1450 area, continues to be in play. If we look at this area on a bigger picture, well, this is a little bit messy. Actually, let me just switch this to day session only just to clarify things a little bit. So if we look at this region here, as I'd mentioned, the 16 down to 1450, this was a multi-test low from the prior session. We fell through it on Monday, and then yesterday we ended up pushing up against it right here. This is a stock zone. Let me turn that on. You can see where that stock zone is coming from. Pushing up against it, failing back through, and then finally pushing through, and then coming back and retesting it in the afternoon and basically closing against that area. This is a former all-time high area and the low of balance from last week, or the low of the range from last week. And so it puts us in within a shot of getting into the 37.36 and then finally squeezing back up into 47.25, which was last week's close. So we are doing our best to get back into the upper end of the range and into last week's balance. The Russell's at all-time highs, pushing overnight to 2040 basically. The small caps are really getting a squeeze higher with the S&P really sideways and the Nasdaq falling off overnight. So there's quite a bit of divergence here in between the different commodities, different products, the different indices. But what this is showing here is that it's recovering a lot better than what was expected. Given that this was an impulse, a 3 sigma impulse day, the fact that we are just kind of barreling up tells me that this is likely to end up being a V bottom, and this low is likely not to get tested anytime soon. Of course, if we do get a shutdown here in the U.S. in one of the states or cities or something, it's likely to compel us to drop 50 points and get down there. But overall, it's been pretty strong. The recovery's been pretty strong from that news-based event on Monday. So that's where we stand. Yesterday's delta was positive. You could see that it was positive with price. and it looks promising for a push. Not that I'm voting in either direction. It looks promising for a push into the upper distribution, and potentially to tackle the all-time high again. With these Senate races out of the way, there's less uncertainty in the market. Less uncertainty in the market, and the market's very efficient at pricing that in. Let's take a look at the day, the composite chart. Each one of these bars represents 1 day of trading in the RTH session, and you can see that last week we had a pretty nice tight balance up top, and then over the last 4 weeks before that, we had a nice tight balance down below. The point of control of that balance is 85.75, which was basically yesterday's low right here, 85.75. That point of control, by the way, shifting up to 92.75. 92.75, and it's likely to rest here on top of this long term. The December the full month of December's balance essentially at 85.75. So what we're doing where we are today is we're stuck at the century figure at 3,700, and we're in between a rock and a hard place. Above us is last week's balance with a low of 1450, which played a big role yesterday. Had some really nice setups yesterday against that level. And then below is the balance of 85.75. So what does that mean? That means that these two areas are likely to be really, really important lines in the sand coming into the non-farm payrolls, which is 2 days from now on Friday. So as we chop around here, we want to gauge how it proceeds above the 1450, 16 area, or if it takes out this low and starts pushing through the 85 area. That's going to dictate what happens next. If it pushes below the 85 area, then we're going to look, of course, at the last low at 50. And as we talked about yesterday, 20 gets back into play, 36.20, and then we have this multi-low right here at 24.25 in the way. So 20 is actually down here. 24.25 is the next key low. And if we get through there, the flush to 20 is going to be very quick. I expect some stops to get run down below there. Again, this is 24. You can cross this out and then take it down to 20 down here. And then 20 becomes the key target below that. If we do not hold the 20, then of course the century figure 3,600, and then we're back into this balance, and we're starting to look at 35.48, believe it or not, as the next area down, 35.48. So that's the map, and the reason I'm talking about this map is to keep myself and everybody listening rooted in the big picture. Now, it's cool that we're using tick charts and point and figure charts and Renkos and whatever else, and we're monitoring things on an intraday basis, but you've got to look at the big picture, and this is what we're doing right here, is looking at the big picture map, kind of like generals standing around a war room table, looking down at the map of the terrain and what is happening overall to figure out which lines are likely to be breached and what areas are likely to be battled for once those lines are breached. So again, 1450 to 16 above, and if that gets breached, then we end up in this 3730, which we got yesterday. That's the balance, and then it gets to 36. So if we take out 1450 again, I'm expecting it to push to 36 up here. There's plenty of range and decent volatility in play here. So it's a question of understanding what has been broken and what is likely to continue to propel prices and to keep ourselves in those winners longer. Remember, our entire objective as traders is to have outsized winners versus our losses. And the way to have outsized winners versus our losses, this is how we stay in business. Okay, this is really important. This is why you can't have a huge multi-week or multi-month losing day. That's gambling. It's hard to survive in this business doing that. If we're putting up a few $100s a day and all of a sudden we have a $12,000 or $13,000 down day, it really is hard. Not to mention the psychological turmoil that is the result of that. It's really hard to maintain in the business just from a financial perspective or an economics perspective. So our goal is to have outsized wins versus our losses, and the way to have outsized wins is to be able to hold through, to understand the big picture enough, which is what you're looking at here. Understand the big picture enough to sit tight and let the trade carry itself to those outsized winners. That's the whole plan. That's our effort. This is what we're doing when we come in every day, is to keep that risk, not eliminate the risk. It's not possible, although many try to, but to keep it reasonable. What's reasonable? Reasonable is a function of the targets, of the upside. So it's all about your R factor or risk factor. So anyway, I won't harp on this too much. I just want you to do well, and I'm talking about this to explain what key areas to watch and make sure that whatever you're trading, whether it's fibs or moving averages or geometry or moon cycles, I don't really care. Just understand that price is king and volume is what backs price up. And that's what we're focused on in this broadcast. So with that being said, I wanted to show you the map for order flow. This was a still shot that was taken a little bit ago, about a half hour ago, so it's not as fresh, but we see that there's some size here stacked in the 90 to 91, 95, 96. I have to shut down Bookmap. Bookmap as I'm doing the broadcast because this laptop's not able to handle all of it. But you can see that there's not much here at the 14 to defend. The market's basically in this kind of 22 to 95, 96 kind of chop area. This area I'm going to stay out of. I'm going to stay out of play in this area. I'm going to let the market decide which side it needs to take out. As we talked about, does it push through this 92, get into 85, and then squeeze below, or does it push through the 40, get up above the 3,700, and squeeze through the 14 half 16 area for a shot at 26 and 30 again, and then 36 beyond there. Anything in between is really scalping. It's really a scalping range that's in there. Of course, if you have a trading plan that can catch the move early, good for you. I don't trade that way, but I just wanted to show you that there's not much. The order flow overall, despite the high volume, is nondescript. So now let's get into what's expected for today, as this broadcast is getting a little long in the tooth here. You're going to have to give me a second. I need to revert my charts back. All right, so here it goes. So we are trading we're currently trading in a 3,700 area. So we are right here. Okay, we're opening in the thick of the overnight balance. We do have the overnight inventory is 80% short. I don't know what it is right now, but it's about 80% short. I'm expecting an open auction that tests down, but I'm looking for it to balance upwards. I'm looking for the market to move back into the 3708, 3709 area, consolidate here, and then I'm looking for it to squeeze through the 14 today to finish the work that it did yesterday. Again, as these Senate elections get called today, there's less uncertainty in the market's likely to respond with higher prices, more risk on, more allocation as things become known. We do have a relatively wide range. Ultimately today, I'm looking for the 36 and a quarter to get tested. That would be the key target as discussed. Yesterday's high was 30 against the key point of control, so I'm looking for it to kind of sit here for a bit, fight the 30, and then potentially push into and through the 36 before it settles down. I'm looking for the market overall to take back the balance from last week and become and get back into within shooting range of the all-time high. That's what the overall context shows. And the balance shows, as we saw in the composite chart. The secondary and immediate balancing of the overnight inventory pushes into the 3709 area, consolidates up here. Note that the overnight point of control and yesterday's point of control in the same spot. These are big magnets now. Consolidate, and then it gives it up and starts to test these lower prices. So we push through the 94 and then through the 85 yesterday, pop through, balance, and then this may lead to more selling. And in this case, we would be looking for a retest of these lows from yesterday, the overnight session yesterday down here. So this would be scenario 2. Scenario 3 is more of the same as yesterday. Open, potentially test down, impulse up, consolidate up here, and then squeeze hard through this. We would have basically a trend day back into the 45 to 47 area. That would be the next spot on the map. Okay? So that would be scenario 3. This is a bullish scenario, and we're back in last week's balance and ready to tackle the all-time high again. Okay, so that's what we've got for today. Again, these are not just lines on a map. These are following auction rules and planning for consolidations and planning for targets. Trade the way you want. Good luck. Hopefully, this has helped you out somehow. Take care.